everyone, so I want to break down extended wick entries now. So I'm going to call them EWEs, which is just easy to identify when people are talking about them in the Discord and so on. So it's got to be very obvious. And generally, you're going to get your extended wick entries, which will be just after news events or during news events, and then we're looking to trade it back. And obviously, the only ones we're not going to trade it on is going to be NFP, but after CPI is absolutely fine. Or just a general impact in the market as a result of, let's say, Trump tweeting or whatever it may be, right? But generally, you're going to get price which is going to be moving higher, and you're looking for, generally before this it's going to be bullish, and you're looking for price to come up and give that huge wick to the upside, which again is going to be very obvious based on those ones that I've already gone through with you. And you want that wick to be a lot bigger than the candle body. So you see that's a lot bigger than the candle body, because what this is indicating is that buyers are getting exhausted and sellers are pushing it back down. Now, you also want to make sure that it lines up with a higher time frame area. So, you know, daily, weekly POI, if you're looking for price reverse from an area, if you're looking at, let's just say on GU, if you're looking for the DXY to be bullish, and therefore you're looking for GU to come back down because we are in a higher area and we're looking for the retracement. Also, if you've got an Asia range, which is down at the low, which also needs filling for the day, it's going to give you a better confluence as well. Now, majority of the time with these type of moves, you're not going to be coming into a POI, and it may look like it's floating in the middle of nowhere. Let's say you might have a POI up here, but again, this is why we're looking at the higher time frame to actually see, does it make sense of price turning around? Are we hitting a, let's say on the higher time frame, you know, a 50 EMA, and that's what the price action is looking like on the 15-minute. If so, we can then take advantage of the new entry model. So the first thing you've got to be cautious of is not just going straight into a short position when price goes back up to the high. That's not what you're looking for. If you see a bullish move like that, leave it alone. What we're trying to find is, first off, you're going to see that price is going to start creeping back up to this high. Slowly, slowly. Again, we don't want another big ass bullish move to the high, because that's just going to indicate that we're going to keep going. Generally, what you're going to have is price come up, fill that high to the left, sometimes with a body as well. Let's just do this. All right. But then what you're looking for at this high now is for confirmation reversal. So far at the moment, you haven't got anything which is indicated that price is going to turn around. So if we've got, let's say, our Asia range down at this low, I'm going to go through 1 hour PA on another video. But let's say our next candle, which is printed, which is like this, and then you have a huge shooting star or rejection to the upside, right? So this is important. Now, don't again think, oh, hang on, I'm getting confused because is this another extended wick entry and I've got to wait for all this again? No, because on the higher time frame, let's say we're on a weekly OB, all this is going to be happening in that higher time frame. So we're now looking for price to come back down, big extended move, indicating sellers in control. We slowly come back up to that point, followed by your nice shooting star, or it could be, you know, even, I still don't mind if it was something like that, a little bit of a doji. I mean, it would be a little bit different because then you would need this to be a little bit higher, right, longer. But the idea is once you've got that confirmation of that wick up to the high, then what we're then looking for is, first off, can we then get a, let's say, a nice bearish move down? And if we can get a bearish move down, then all we're looking to do at that point is to pull back into this area to fill imbalance. You should most of the time be able to at least cover this high. If the wick's massive and you can't, then just leave it alone. But generally, if you can cover it or match it with about 10 pips, then you're fine. Sometimes your 10 pips start to make them just to about here, but that's all right, because the idea is that we have areas that need filling up on the low. We've come up to this at the beginning of the day as well, which is important, because then we're looking for the pullback for the rest of the day. And then you're just waiting for price to come in to fill imbalance, and then you're looking for your move down. Again, as soon as you're hitting 1.5% profit, just move to break even. If you're a little bit cautious about the new model entry, you can move to break even as soon as you've got a significant move away, just to help with psychology, looking for price to come down to fill your wick to the low. So that's really the first type of thing that we're looking for in relation to price action, with that big ass spike at the high, creating the evening star formation for the move down. So the second one that we're looking for, again, always in the higher time frame. So assume that the higher time frame is the same for both of these in a weekly or daily POI, 50 EMA, whatever. Price is then going to start creeping up again. Let's tell you what, let's just clone all this just so it's identical. So price is going to start moving back up to this high, clone, all bullish moves, coming up to fill this wick, and then let's just do this one as well. Right, so wick is now filled. Let's move this up so it makes sense. And again, it doesn't matter if you've got wicks on these, it's absolutely fine. Let's just put these on as well. One there, and then one here, like this. So the next thing that we're looking for now is price to give us a nice bearish engulfing. So you see this one, we've got the big ass wick to the high, shooting star, could be a little bit of a doji as well. What I'm looking for is, again, some type of bearish move. Now, we could have, let's just say for the sake of it, we have a wick in here, right? We have no imbalance in this area, but this is quite important. So you don't always have to have this. This is another confluence. There can be multiple confluences this. So I'm trying to get them all down to you. But let's say you've got a Mariposa closure straight by a Mariposa open and price just drops. Again, we're flat at the top, indicating you'd think after a Mariposa closure bullish move, we should continue to the high. But then if we then just open Mariposa and close down, again, it's indicating that sellers have taken control. So that's one confluence. But generally, even if we haven't got a, let's say, Mariposa open or Mariposa closure on these, let's say it looks like that, still with your bearish engulfing candle, you've got your move down confirming that we've got bearishness after we filled this wick. So the way that you would normally enter, so we haven't got the imbalance to enter on. If you didn't have this wick here, but you still had your bearish engulfing, you would still look for price to pop back up to this point for the move down, right? So pretty similar, to be honest. If you've got, let's just say, just to make this very clear, because you may go, well, these two look the same apart from this wick. On this entry model, I want that bearish engulfing to be like a serious, nice bearish move. On this one here, it could be something like that, right? But on the one without the wick, because this gives me a lot more confidence because you've got the wick to the high. On this one without the wick to the high, a nice bearish engulfing indicating that sellers have taken control is better, because we haven't got that extended wick to the high, which is going to show us that sellers are in control at this point. So get and wait for a nice bearish move. Sometimes, you may, let's do on this one, you may have something like that. That's still fine on that one, but over on this area, ideally we want nice confirmation. So you're waiting for your pullback again. Cover this high, which should be a lot easier. Also, don't forget, if you've got your age range down at the low, it's going to make it an even better confluence. But then we're looking for price to come. Also, as well, let's just say, I don't know, we have a weekly high, which is at this point that we're retesting. This might be the last weekly high or the previous daily high, and you're seeing this price action. It is a good confluence for the short. The other way that we could look at this, so let's say we have a wick down here, and you've got your evening star formation, you've got no imbalance, you've got no way to be up at the high, but we can still take advantage, because generally at that point what you're then looking for is then price to then come back up to the top of where the body's opened or closed to that area, still for your move down, something like this. Now you may find, if you've got an evening star formation or whatever, you may also have a 1 minute break structure potentially, but it's a completely different entry model because you're not relying on a 50-minute POI. And also the thing to say that if you have got a 50-minute POI and price action looks like that, it's just going to give you that extra confluence and extra opportunity to go in, sometimes without there being a breaker structure. You're just going to understand what price action needs to look like to realize that we're going to be reversing it in the other direction. So that's what we're looking for. And then vice versa, if you have the same at the bottom for a bullish move, it's going to be looking like this. And then again, you may then have a, I don't know, a weekly low down here or a daily low at that area, or prices come down into a higher time frame point of interest on the weekly or daily, or you may have 50 EMA coming up on either of these areas, and therefore it's making sense that we're going to reject off it. All right, so hopefully that makes sense on that. And now I'm going to move on to the next video.